Hey traders, in today's Forex Market Preview video, I'm going to show you how I caught a 200 plus pip move on the euro dollar. I'm also going to show you how you could potentially get involved in the next leg up, as well as look at a few other trading opportunities that are on my radar. So sit back and I hope you enjoy this week's Forex Market Preview video. Hey guys, Akil Stokes here, Forex trader and head trading coach over at tradingpower.com, and thank you for joining me once again for another Forex Market Preview video. I was looking back at a few of our past episodes and seeing how excited we got over reaching 20,000 subscribers. It seems like so long ago since we've started, and you know, now that we're over the 100,000 subscriber mark, we're at about 106 right now, and probably one of the biggest or most popular trading education companies here on YouTube. I just want to take a second to say thank you for all of the support. There's no way we could have done this without you guys. You guys consistently watching the videos, liking, sharing, and just spreading the word about what we have to offer here, whether you're an enrolled client or whether you're just a supporter that likes to check out free videos on YouTube. So I appreciate it. I can't wait to get to the next goal. I have no idea what that is, but I'm sure that will be there in no time. So we're going to start off today by taking a look at the euro dollar. This was a trade that I involved myself in a little over a week ago, and I'm going to take a step back. We're going to show you what we looked at in our Syndicate program, and then we're going to do some more analysis on the pair and talk about how you can potentially catch the next move up. So let's head over to the charts. All right, traders, so right now we're on the euro dollar daily chart. I just want to give you kind of a bigger perspective on what's been happening with this pair really over the past few years. We're actually going to hop out to the weekly even later. So we're going to be touching on some time frames that are a little higher than what we usually look at here in the Forex Market Preview video, but it shows the importance of doing that top-down analysis and really having some sort of perspective of what the overall or the underlying tone of the market is. And you can see that we've essentially been in consolidation on the euro dollar here since March of 2015. I know we've joked in the live room in the syndicate a lot about how this pair has just gone sideways for 2 years, but seriously, it really has gone sideways for 2 years. You can see making our lows right here down in March 2015, and then basically just chopping back and forth in an area of consolidation. For you guys that saw the video training I put out during the week teaching you how to identify a trend, this is an example of, again, there's no trend. The market is moving from left to right, up and down. And recently, this is the move that caught my attention. We broke out of our highs here. So this green line here is the high of our consolidation period. You can see that we've recently been in a tear of an uptrend since about January essentially, and we've broken and closed above our previous structure highs, and this is the first sign that I have for trend continuation. When we go through our trading process and looking at the charts, it's a 4-step process that we go through called IPDE, and that stands for identify, predict, decide, execute. So the first thing we ever want to do, and it doesn't matter what time frame you're on, this is built into your routine. I guess it does matter because you want to be consistent, but you can do this on any time frame. The I is identify. We want to identify what the market is doing, what the market has done. We then want to predict where is the market likely to go next and how is it likely to go there. We then want to decide based on that prediction, how are we looking to enter? And that's going to be referring to our trading plan and looking at the different strategies we have to attack certain market conditions. And then finally, the E is execute. That's seems like the easy part where you're just clicking the buy or the sell button, but you'd be surprised at how many people get gun shy and they do all the right analysis. When it gets to the final part of executing the order, they freeze up. But we've identified the higher high, higher close, right? The break above, close above, which allows me to make the prediction that price action is likely to go higher. We don't have a confirmed bullish trend yet on the higher time frame, despite this move up. This is going to be a confirmed trend on the lower time frame, but on our daily here, we don't technically have a confirmed bullish trend. But we're making that prediction based on how we see price acting. And as we zoom in, right? You can just look how the market moves, right? Markets move in two ways when they're trending, right? They basically a trend, or they expand, extend, and then they kind of consolidate, they contract, right? So we have an expansion, kind of a contraction, expansion, contraction, expansion, contraction, right? We do this dance all the way up. And we got to these highs, our break above, close above right here, and we started going sideways, right? We started consolidating, and consolidation leads to a potential expansion. Now, there are different reasons why we had this consolidation. It could be structural, of course, but also it's just an interesting time in the year for the markets. It is late August. These are the true dog days of summer, right? So this is really the last chance that a lot of your professional traders, institutional traders are going on vacation, right? They're enjoying what's left of their summer before starting over again in September. So the trading volume is a little bit thin during this time of the year. And then this week in particular, we also had our Jackson Hole Symposium, which is a meeting that a few of the central bank leaders from over the world come and have here in Wyoming, where they talk about different issues that's happening in the global economy. And we had Janet Yellen, Fed Chair Janet Yellen, and ECB President Mario Draghi speak on Friday after the two-day meeting was wrapping up. So the market was kind of waiting to see what they had to say before making its move. That's actually, I don't want to get too much into the fundamentals, but that's actually the cause of our big bullish candle right here. The market, obviously the overall sentiment of the market was short dollar, right? Sell dollar, buy euro, or sell dollar versus the euro. And they were waiting to see if Janet Yellen came out with any type of more hawkish than usual tone to see if that changed their mind, right? The market typically has an idea of what it wants to do, and then it kind of waits for confirmation. And Yellen came out and did nothing of the sort. So the market said, you know what? Okay, there's no reason to stop selling. Let's sell some more. And we saw that big sell-off in the dollar here. And again, for you guys that are brand new, I say sell-off. You can see the markets going up, but remember our pair. This is the euro and the dollar, right? So the euro is the first pair here. So if price action is going bullish on this particular chart, that means the euro is being bought versus the dollar. If price action is going bearish on this particular chart, that means the dollar is being bought versus the euro. But anyway, during the week, here's what we noticed, right? So our green line here, this is our magic line in the sand for the highs of our previous level consolidation. So this was a very important mark for me. And you can see after price action put in a higher high, higher close, we started retesting this level a few times. We retested it here. We retested it there, 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 there. And really to the newer eye, this may just look like consolidation, but for someone that has trained their eyes on how to read a price chart and really trained their eyes to understand the story that each candlestick shows you, what do you notice at this level, right? Take a few seconds. You can pause the tape if you want, but do you notice anything similar that's happening at this level? All right. If your answer was the wicks or the long shadows, then you're correct, right? Although price action has hit this level, look at the wicks, right? The majority of the wicks, so the longer shadows are to the downside. And the story that this tells me about the market is that price action, right, is testing this level and getting rejected, right? So the sellers are trying to test this level, buying pressure beats them back. Sellers try to test this level, buying pressure beats it back. Sellers try to test this level, buying pressure beats it back. Yes, we don't have any really aggressive or confirming bullish moves in the market, but this is a very powerful sign that although the sellers are trying and trying and trying and trying and trying, or the selling pressure, I guess you should say, is trying and trying and trying, it keeps getting beat back and it's unable to win. Typically in these type of situations, right, if you keep trying something and it doesn't work, what do you think you do afterwards? you give up and you live to fight another day. And that's exactly what we saw here. So what we did, and it had to be last week, I think it was last Monday, was we went down to the hourly time frame, right? This is our the trading time frame that we're looking at. And we identified a kiss of death trade at this level. And a kiss of death is basically a deeper 2618 trading opportunity. If you guys aren't familiar with the 2618 opportunity, just head over to the website, tradingpower.com, and let me just bring it over real quick. Always time to shamelessly plug our free content, right? Head over to the website, tradingpower.com, click that Learn to Trade. Actually, nope, you don't even have to click that tab. You should to get more training, but you can actually see it right here on the homepage, right? Start the free training for the 2618 opportunity. But what we're looking at here is a 2618 opportunity where price action did something like this, right? So we're consolidating. Price action came down. We created a double bottom, right? We then broke and closed above that double bottom, right? So the bulls looked like, they were going to come up and the buyers are going to retest this level up here. We then spiked all the way down, a very aggressive move down to this level. Spiked past this level. We're actually watching this live in the live trading room. Spiked past this level, looked like we were going to have a breakout to the downside, which would have offered its own trading opportunity. But before the hour closed, we got sucked all the way back up, right? And we could not break and close above our double bottom lows here. And this was a very powerful sign. I call this a kiss of death opportunity where the market, the buyers give, or the sellers, I should say, give one last ditch effort to penetrate this level, right? They give everything they got, and it still doesn't work. And then they just give up. And typically you see a very powerful reaction in the opposite direction. So we got involved here right at the bottom and we rode this thing up. Now, in our syndicate program, we took targets right here. In our syndicate program, we only take, we call it a one in, one out strategy, meaning we only take single position targets. We're looking for one stop loss, one targets, no fancy stuff like trailing for bigger targets, mainly because it's an educational program. The goal isn't necessarily to make as much money as possible in the syndicate, but it's to show our traders as many opportunities as we can. So if we're to trade like this, where, me personally, I'm still sitting in this and have been sitting on this going on week 2, it doesn't really help our new traders that are in the program because we're just typing in, hey guys, still in euro dollar, bye, right? So in the syndicate, we took targets right here, full targets right here. I took the first half of my position right here for about 100 pips. And then, right, the market started consolidating a little bit more before finally breaking and closing above right here on Friday. Now, the question is, what is next? Well, I'm still thinking trend continuation here, right? We talked about this on the daily already, about breaking this line. And if we go back to that IPDE process, right, the next prediction I want to make is, where is price likely to go next? Because obviously, I don't want to involve myself in a bullish opportunity if I don't believe the market is going to continue bullish and if there's not enough target potential in where I think the market is likely to go next. So this is where I want to go to my weekly chart because, again, we've been in consolidation for 2 years. We need a bigger time frame just to gain perspective. And our most recent move is right here. This was the little structure that held us up, by the way, right in here. So this is a difficult one because we have multiple levels of structure. I'll draw them out, right? We have structure lows right here, previous structure support. We have lows here. We have lows here. And you can see they're all at different levels, right? They're all in the same zone, but they're all at different levels. And this is where just experience comes in reading a price chart. The level in which I'm looking for price action to come to next is going to be right in here. And it's a little bit difficult to see, right? So right underneath the $1.25 level. It's going to be a little bit difficult to see. Actually, let me just, yeah. Here we go, right in here. A little bit above that. There we go. Right above the $1.25 level, about $1.2650s. And you can see that this is just a level that price action hits multiple times, right? We come down, we found support again, right? We even have a hold. If you zoom in your chart, you can even see a hold at this level where price action came down, got rejected, traded underneath, tried to push back above, right? Support turned to resistance. And you can just see the multiple times that price action hit this level. We have another one right here, in here, another support turned to resistance, right? Little structure swap type deal, and so forth and so on. And again, this comes with being able to read structure. I did a rant about this earlier in the week in one of my trading blog videos about how traders often try to go directly to how can I trade? What's the trading opportunity? How can I make money? And they ignore the kind of the groundwork you have to put in, the foundation about reading structure, reading price action, knowing how to identify trend, because that's going to come in handy not only for finding trading opportunities, but for stop placement and for target placement as well. Actually, I think I have a good, give me a second, guys. I love doing these videos live. These aren't scripted, so I have no idea what I'm going to do. But I have a great, I think I have a great quote I want to share with you by one of our traders here who left a comment underneath that video. All right, here we go. So let me read it to you. It says, Tony, one of our most supportive members here, says, you walk past the big hole in the ground at the building site for months and months. And now and again, you take a peek to see if any work is getting done. You see stuff happening on the foundation, but nothing is happening. What the blank is going on? What do they do all day? You start to think that this building will never be built and you stop taking a peek. Then one day, boom, the building starts to go up and the people who haven't been walking past every day say, wow, that went up quickly. It's only been a few months. That must have been an easy building to build. The building game is easy, but you know better. You know that the foundation took months and months to get right. And without those solid foundations, your building would just topple over and you would have to start all over again. How do we know this? Because we are some of the guys, Akil, Jason Stapleton, Jason Greystone, and Charles, me, and countless others who said that that must have been an easy building to build. The building game is easy. Moral of the story is put your groundwork in, guys, and get those foundations right before worrying about the colored roof, aka your Ferrari and all the fancy things you want to buy for your trading success, right? And he says me and Charles because all of us here at Trading Power, we started the same way. We started just like you guys, where we got into the markets because we had hopes of making a lot of money really, really fast, to get rich quick scheme. And we went straight to strategies and we ended up wasting a lot of time and wasting a lot of money, learning a very valuable lesson that you will not be a successful trader. I repeat, you will not be a successful trader unless you have a solid foundation built. So that is the best advice I can give you. That was the title of the video. The best advice I can give you is, and it's hard, is don't worry so much about the strategy. Don't worry so much about how you're going to make money. Focus on the process, right? Focus on the process. Once you develop a strong foundation, right? Once you develop that foundational skill of just reading a price chart and being a chartist, it's going to be very easy to start creating and finding, whatever strategy you want to go on to be. But anyway, so we're looking at this level right here based on structure, and we can do a few other things here, right? Just to give us a little bit of confirmation at this level. So what I'm going to do is I'm going to take my Fibonacci retracement tool and I'm going to drag it from my previous swing high to swing low, the swing that occurred before our consolidation. And you're going to see that, look at that. I'm going to have a 618 Fibonacci retracement right at that level. I'm also going to take my Fibonacci extension tool and I'm going to draw it backwards, right? This is a different way of using it. Just from the lows back to the highs of our consolidation period, right? And you'll see that, boom, I have a 1618 Fibonacci level at that same level. So basically we have the two golden means of Fibonacci's, the 618 retracement and the 1618 Fibonacci extension, lining up at the same level of structure that I eyed earlier. Now, for you guys that are new, Fibonacci's are not magic. And I guaranteed if you try to trade strictly off of Fibonacci's by itself, meaning just buying and selling whenever price hits a Fibonacci level, you're going to lose a lot of money really quick. How do I know? Because I once thought that and I lost a lot of money really quickly doing so. But what's great about that tool is you can use it for confluence. You could use it for confirmation. And I always say trading the market is like being a detective. You're not looking for one thing, right? A detective doesn't look for one clue, but they start finding a clue here, a clue there, a clue over here. When they put those clues together, it gives them a much better story, a much better picture of what's going on. And in our case of traders, it gives us a much better idea of levels that we should pay attention to. So we can certainly see an expansion up to 126.50s here on the euro dollar. Now, if we go back down to our hourly chart, right? This is the time frame, the hourly and the 4 hour where I look to execute my trades. Here's what I would look for. I would look for the market to give us some relief. We just made a very big move. We essentially went straight from 117.80s to about 119.40s, right? So we went up pretty far. So wouldn't surprise me if we saw a little bit of a correction to start the week next week. The level that I would be looking for comes right in here, right? This is our previous retracement. So I would keep an eye at this level. This is the first level that I would look for your trend continuation opportunities. The second level is going to come right back down at this previous level of structure. And this is important to know, right? We don't know where, well, we never know where the market is going to go. All we can do is make predictions. So when I draw two levels out like this, right, it means if this level doesn't hold, and maybe that means we get a trading opportunity and it loses. Maybe it means we never get a trading opportunity to begin with. But if this level doesn't hold, right, I'm not all of a sudden changing my mind. Oh, we have to be bearish. We have to be bearish. No, I understand that this is going to be the secondary level to look for. And then I start preparing and planning on how I want to get involved at that level as well. So two different opportunities here. They're both going to offer great risk rewards, no matter how you're trading them. Obviously, if you're a trend following trader, there's lots of room to the upside. I showed you my prediction earlier. But even if you're a trader that's a little bit more conservative and you want to have stops below these lows and targets just at a retest of previous structure highs, you can see that you're still getting almost a 2-to-1 risk reward here. So that's an opportunity that I'll certainly be looking for this upcoming week, and we can actually look for this in the syndicate as well, since we're completely out of the trade in the syndicate. For me personally, I'm just going to keep trailing stops. Again, I have half of my position still on board. As long as we keep creating new structure, I'm going to keep rolling my stops up, and locking in more and more profit as we see the market to continue higher. So this may end up being one of those home run trades. I say I don't shoot for a lot of them during the year, maybe a handful, right? 4 or 5, but this is going to be one of them where we're going to see if we can get a really big winner. And that's going to, all you need is 1 or 2 of those a year to make your equity curve look very, very good. So we'll be keeping an eye on this. Man, I went long, 20 minutes already. All right, let's go to the next quickly. Let's go to Euro Yen next. This is a trade that we're actually involved in the syndicate. It got filled Friday, so you're going to be able to get a better entry if you didn't get involved in this already. But let's head over to Euro Yen. All right, so what we have here on Euro Yen, and is this going to be? Oh no, it's technically invalid. But I'm going to share it with you anyway because some of you guys have different rules about the X leg, but I'm involved in this. But this is going to be a bearish bat formation. So this is going to be an advanced pattern formation where we're looking for a move like this. This is going to be our swing high to swing low. We call this our X to A move, right? X to A, swing high to swing low, right? Actually, I can use this over here to make it look a little better. It's going to be our X to A, swing high to swing low. Our A to B right here. Just go ahead and change this color. Well, our B to C, and then our C to D completion for this particular pattern formation came right here at our 886. I'm trying to get a good color so you guys can actually see it. Nope. Striking out here. Come on, Akil. Nope. It doesn't matter. There we go. That works. So I got filled this Friday afternoon, right at about 1:30 even. And you can see price action pushed up to retest the X leg. Now, depends on your rules for trading these pattern formations. Technically, pattern-wise, the pattern is invalidated if price action penetrates the X leg, which we have. However, we know structure isn't invalidated unless we have a higher high, higher close. So when I work with traders on going over rules of what makes a pattern formation invalid, I give them both of those options because different people are going to look at them differently. But if you are a trader that sees this as a valid pattern formation, you're going to get a much better entry than I did. Maybe not a much better, but you're going to get a little bit of a cheaper entry than I did, right? Because you're looking at a move now that looks something like this, right? You're looking at a short position at the open on Sunday. You're looking at trading back down to our B leg here, right above our B leg for target ones. And your stop loss, do I have one on here? Your stop loss is going to be about, I don't have well, we'll just eye it up. Your stop loss is going to be about this level right here above your previous structure high. I guess we can do this. And as a way of kind of predicting, probably in the right area right here. This is not my normal, look at that, dead on. This is not my normal charting platform. I'm on TradingView right now. I usually use NinjaTrader, but so I don't have the same tools lined up here. But you're looking at a pretty decent risk reward, and certainly a better risk reward than what I got. And again, Syndicate members, this is one that came through the trade floor Friday afternoon. You can get involved in this. Again, just make sure that this violation meets your rules or what not to trade. Now, let's go to one more pair here. We're going to make it short. Real quick, before I forget, I want to read this cool comment to you. I had a trader that he's been tracking his trading online, right? He's been kind of showing it on social media. And I encourage that. I encourage people that start blogs because it holds you accountable, right? It's one thing, and this is the hardest part about trading, is that we're by ourselves. We're our own bosses. But when you start sharing stuff like a blog or just sharing your results online, it kind of holds you accountable. And I think it puts an extra pressure / motivation on you to do well. And this trader had shared a pretty good post. His equity curve is, let's just say it's heading in the right direction. And he had a question about money management and when to adjust position sizes. And at the very end of the email, he said, Akil, I also want to take some time to thank you for sharing my post last week. I did a blog post on it. Blah, 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 keeps me motivated. You and Jason has kept me motivated and on track. Not only in my trading goals, but in my future financial goals and visions for myself. When I used to watch your YouTube videos and you would say, invest in yourself, first, I never knew or never understood how much of a return on investment I could be achieved by investing in yourself first. When I say invest in yourself, I mean investing in you, right? And investing in your education and tell yourself that, hey, either the money spent if you're buying a course or the time spent if you're just, sacrificing something else to spend time scrolling through charts, that is called an investment, right? Yeah, it stinks doing back testing. It stinks, taking out time to, play a video game, to study candlesticks for a few hours a day, but that investment will pay off in the future. And that's what I mean by invest in yourself, right? Make the time and energy and sometimes the money sacrifice now, right? And if you work hard enough and work smart enough, it's going to pay you back in dividends later. But he said, never understood how much of a return on investment could be achieved by investing yourself. But after purchasing the Ultimate Trader Transformation course and following the Syndicate and live rooms, my whole outlook on life and goals for the future have changed dramatically, and it feels awesome. And we always talk about staying involved. And this was a trader that made the decision that I'm going to stay involved and I'm going to stay motivated by coming into a system where I have support, where I have people sharing with me ideas each day, getting motivated by other traders, getting motivated by seeing the same thing that my coaches are seeing, stuff like that. And it's just really cool to see that type of stuff pay off. It never gets old. Never gets old hearing success stories. Trust me. But our last pair I want to take a look at is the New Zealand yen. And we're going to go through this real quick because I'm about 30 minutes on here already. But New Zealand yen is a trend continuation opportunity. This is not a pair in my portfolio, so I don't trade this, but I was looking at it because I was nerding through some charts earlier today. But you can see that the most recent move here has been down, right? We've come up to retest previous structure highs. This is another 2618 opportunity for you guys paying attention, right? Boom, double top, breaking close below, 2618, kiss of death, rallying back off of it, right? So we've made a move down, right? Look left, structure leaves clues. We pushed up, we put a lower low, lower close in. What we're looking for, again, very similar to what's happening on the euro dollar, is a retest of previous structure and to catch the next move down here. And if we go down to the 4-hour chart, again, you can see that market's already starting to put in kind of like a flag formation here, an upward channel. Technically, our kill zone for the short is going to be from here. Nope, try that again. Technically, our kill zone for the short is going to be from here to here, right? But you're going to have some smaller zones in there that you can pay attention to as well. I'd certainly keep a level or keep an eye on this level right here between, let's call it 80 cents and about 79.50s. That's the level I would pay attention to for your first first strike entries at getting short here. So again, I'm gonna rush through this a little bit because this is a 30-minute video and I want to keep supposed to keep these 15 minutes. But I hope you guys enjoyed. As always, if you did, just take a second, guys, hit that like button, share this on social media. It's a pleasure for me to come in each and every week, or try to come in each and every week and do these videos. I know I probably won't be here next week, but I love it. I love doing analysis. I love talking to you guys. I love sharing success stories. I love education, and as a trading educator, you can only imagine how many times, at least once a week, I get hit on a YouTube comment saying, well, all educators are just educators because they can't trade. And obviously that's not true. That's the stupidest thing in the world. There are some that can't trade, but there are plenty of educators out there that can trade. And I actually had a good conversation with a really good trader out in Oregon, David Floyd from Aspen Trading Group. And we talked about the difference between managing money, which I used to do, and educating. And it's just, it's what do you want to get out of life? I think that's the most important thing. You can make money both ways. You can make more money managing money, trust me, than doing education, but it's not always about the money. Don't get me wrong. This is coming from someone who loves money as much, if not more, than the other person. And my goal is to make as much money as I can, right? But you want to have purpose as well. Purpose is important. You want to make money, but you want to have an impact. And that's something that I was raised on, charity, giving back, and just doing something positive. And, by being able to teach others and to see people change their lives due to their trading. And I know it's not me, right? They're the ones that are putting in the work. They're the ones that are doing it. But to know that I had a small... I played a small part of that is just, it allows you to wake up each morning and just smile and be happy and know that you're doing the right thing in life, and know that hopefully when I'm gone, from trading, from education, from this world, hopefully, my son can look back and say, hey, my dad did some positive things. So anyway, enough of that emotional junk, right? No emotions in the market. I'll see you guys next time. Transformation members, I'll see you Monday. Live room members, no live room this Tuesday. I've got some things I need to do, unfortunately. I don't want to do them, but I have to. And again, probably no Forex Market Preview next week. My schedule's starting to get a little bit busy. If I can sneak one out, I will. But just pay attention to the website, pay attention to the YouTube channel, and the next time I post a video up, you'll be notified, all right? Take care, plan your trade your plan. You guys have a great weekend. You guys have a great week of trading, and I'll see you next time. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look and you'll see more videos available for you. Have a good one.